What should I know about Veritasium?
It was under the blood moon. I felt my heart come. I held you in this strange light, a place where shadows.
So basically, I'm looking to tie the entire world through Veritaseum.
How do you identify like a good crypto project to get behind with if you're quite new to crypto?
Well, first, what are your objectives? How do you define a good crypto project? Before you get to the actual project, you have to get to yourself. So first, you have to identify, right? How would you define and qualify what a good project is? What do you want out of what are you doing? Are you doing it for a financial return? Are you doing it for a utilitarian use case? Are you doing it for a little bit of both? And then if you're doing it for financial return, you have to go through your full risk return analysis, liquidity, et cetera. You know, what investment time horizon are you looking at? What's your risk tolerance? What's your knowledge base? How much do you know, et cetera? If you're doing it for a use case, well, then what are you going to use it for? How? You know, in what fashion? So that answer, while asked often and answered often, I feel if it's answered without those preliminary questions answered, the answer is either ill-advised or ignorant or both. So I don't want to sound like I'm pushing off to the side, but if you wish, we could role play. Again, I have to go through the same. This is not investment advice and legal advice. It's a Reggie's opinion. Okay, and if it comes out of my mouth, it's an opinion. Unless I say this is research, empirical fact, then I'll throw the source and a formula across the screen. Otherwise, it's my opinion. Okay. If you want to role play, I can role play with you for the next 3 or 4 minutes, 2 or 3 minutes. Would you like to do that, or would you rather keep your private?
No, let's role play. Let's go with it.
Okay. So you have to start off.
Okay, so I think I asked this question to is it Trey? To ask you. So when at the end of every month, I've got like about £1,500 left to play with.
Okay.
And I like going by what you were saying and what you advocate as making your money work for you.
Mm-hmm.
So obviously, I'm looking at it from a financial return rather than a use case at the moment.
Okay.
So I guess my question is how can I put my money to good use to start the seed growing basically?
Okay. So with that $1,500, first of all, you could potentially, most people can increase that $1,500. I teach my kids that I tell my kids, I want you to be producers in lieu of consumers. So when you walk out of the house, so when you turn on your glowing screen, I want you not to buy things. I want you to sell things. So most people, by definition, just like they're trained in academic matriculation to be workers and laborers, okay, to benefit the capitalist class. And I'm a member of the capitalist class myself, so I'm obviously not knocking them, but I don't feel that I have to draw a concrete mold because I'm also believing in meritocracy, okay? When you walk out of the house, when you turn on the screen, do you go and buy things or do you go and sell things? If you find yourself buying things at retail price in retail establishments that you don't truly need and or do not create more of income or asset base for you, then you should cut that back. One reason why you do that is because you find fulfillment in it. That's good. Happiness is, what we live life for. But is that fulfillment truly coming from you, or is that fulfillment being programmed by an outside media source? Do you really need a BMW, 7 Series? Or would you be happy with an electric scooter? Particularly if you live in an urban area, you never really travel more than 3 blocks without taking a cab, et cetera, anyway. Just an example. Okay, do you really need a Birkin bag, et cetera, et cetera? You'd be shocked if you went and summed up how much you'd spend on things that you were told that you would make you happy or give you a higher status that end up just sitting around and not being used. Okay, it's a very good chance that 1,500 becomes 2,200 pounds. Okay, so that aside, okay, let's say it is 1,500 pounds, right? 1,500 pounds per month. Now you have to give me what your risk tolerance is and what your investment horizon is. when are you going to need that money back? That's an actual question, not a rhetorical question.
I don't know. Maybe like you invest for a year, right? Or
No.
a year.
I don't personally. Put it this way, I'll give you an example of time horizons. A year is very short term, okay? There's really no such thing as a short-term investment, okay? At best, it's high speculation. It's possible for you to invest in a year and lose money in Bitcoin, okay? Definitely possible to do the same in stocks. So intermediate term would be 5 years if you go by academic studies. I look at things in terms of generations, okay? So my investment horizon is when my children are mature and grown and can handle assets, okay? That's the beginning of the investment horizon. The end of the investment horizon is when they're ready to pass it to their grandchildren. If you think in terms of generations, it gives you significantly more freedom. A lot of people or a lot of institutions can't invest in Bitcoin because it's too volatile. They don't have a charter, et cetera. And as everybody knows who's listened to me over the last few months or a year, I am by far not a Bitcoin maximalist. But Bitcoin does have its attributes, right? That high volatility is not a problem as long as you understand that your investment horizon should be realistic. Over any 5-year period, just make sure I'm correct here. Yeah, over any 5-year period, Bitcoin has outperformed almost everything except for possibly Ethereum. Adjusted for risk, Bitcoin has still outperformed almost everything, way most institutional investors and probably every retail investor around. Now I have much less competition. High volatility, high liquidity, right? Low competition. What does that mean? That price is minimal. I'm probably buying it for less than it's worth because everybody else runs away from it. Okay. Yeah. One of the big advantages of going for a realist, a generational investment return, number one. Okay. Number two, even those who want to go into it, they can't because they're professional investors. They have investment charters and they have a bunch of bureaucratic nonsense. Wall Street guys, corporations, they have to create quarterly returns, annual returns. And a lot of investors don't want to hear, I'm in it for a generation. So they're limited to the amount of risk they could take. They're limited to the amount of investment horizon. Do you know who's not limited? Family offices who already have wealth, and they don't need a lot of wealth. They just need foresight. There's a reason why the Rothschilds are the Rothschilds, right? They don't look at things a year at a time. They don't look, a quarter means nothing to them. A year at a time means nothing. It seems like a long time, but imagine, I'll give you an example. It's skewed because it is this very high performing asset, but I bought my first Bitcoin for, I think, $120. My first ETH I was there in January 2014 when I announced it, but I didn't buy at the time. And I think it was about 7 cents roughly. Okay. When I first did get into it, I think it was $7. But ETH is now 4,200, something like that right now. Bitcoin is 63,000. So you do 120 into 63,000. Look at that gain. And this was from 2013, 2014, 6-7 year horizon. Okay. That's just a 6 or 7 year horizon. Imagine 10 and 20 years at a time. The Rothschilds can invest in countries, right? They can invest in Iraq. Let's take Rothschild, let's take the name out. Someone invests in Iraq, right? A rock with a lot of trees on it off the coast of northeastern United States, right? You take advantage of very, very friendly indigenous people, used to be called Indians because Columbus thought he was in India, but now they're Native Americans, indigenous people. I think Manhattan was purchased for $20 or $30. Okay, Manhattan is worth trillions now because someone was able. Now imagine if you are a wealthy family from Europe or from Africa, or from anywhere else, and you can think several hundred years into the future. Okay, the amount of wealth you generated is almost incalculable. Let's say someone paid $100 for Manhattan. Okay, I don't know if you can value Manhattan, but we have single buildings that are worth $500, $600, $700, $800 million, right? There's tens of thousands of buildings, if not hundreds of thousands of buildings in Manhattan. So I'm trying to give you a perspective, a landscape of how much wealth can be generated when you can think into the future. Now, during all that time, you have to pare back your bad investments. You have to learn how to recognize a bad investment. A bad investment is not something that's volatile. It's not something that goes down in price. It's something that's just fundamentally misvalued against you or to the antithesis of what you want or expect. You peel that back, you accept your loss, and you put that capital into something else. Patience is what almost all investors lack, actual patience. Retail investors want to get rich quick, right? Getting wealthy is a function of time. So getting wealthy quick doesn't make sense. That's like going fast, slow. It's not how it works. Going fast takes acceleration. Acceleration is a function of time, okay, plus movement. So, someone asked me this morning, how can I get rich quick? It just doesn't work that way. And valuation and patience. I'm sure I repeated myself at least once.
From BBBSOT here in the Veritaseum community, why are all assets inflating right now except for gold and silver? Follow-up, are gold and silver a good asset class to hold for your wealth creation strategy?
Well, I personally don't think gold and silver should be used as wealth creation. They should be used as wealth preservation. Gold, for the most part, I'm not going to speak of silver. Silver is more volatile than gold. Gold is much more widely adopted over the recent history as FX bouncer. That's what we call it, where you use it to quell volatility, particularly downside volatility in foreign exchange reserves. Okay, so you don't invest in gold. You buy gold to preserve purchasing power. Okay, so when someone says, why is everything inflating except for gold and silver? Now, when you say now, that's probably the answer to your own question. Remember, we're discussing investment horizons, okay? 1 year, 2 years, 3 years, that's not an investment horizon. That's a speculative horizon. Now, I'm not saying you can't do anything for 1 year or 2 years, 3 years, but you're speculating. You're rolling dice, okay? If you study statistics, you can roll the dice and you can get, the optimum combination of dots your first go, and you can win, walk away with everybody's money, okay? But that's a speculative win. Arithmetically, mathematically, statistically, if you roll your dice 300 times, okay, those statistical numbers will pan out with error rate of roughly plus or minus 2, 3, 4, maximum 10%. Okay, so the more you roll your dice, the closer you go to the mean for the statistics. It's possible you can, hit a home run. You could go and buy one lotto number right now and, hit the Powerball or whatever the lottery scam or game, government, confiscation of people's money who should know better. You can hit it that one day, okay? But that was luck. You play it every day, you will lose money almost consistently, okay? And that's why the government has a lottery. Why do you think states have lotteries? It's a revenue stream.
It's a regressive tax.
Right. And that revenue stream, right, almost has no payouts, no expenses, no real liabilities. So they take a large amount of money in, right? And states don't pay taxes. When someone does hit, they don't have to pay a large amount of money out. They give you an option. You can have an annuity payout. So an annuity payout takes advantage of the MISADA, money as a depreciating asset. So they hold on to the money and pay you a little bit at a time. And every bit of money they hold on to is worth less and less, which is why they pay you a small amount at a time. So if you win $100 million and they agree to pay you out over 20 years, you're not getting $100 million of value. You're getting more like $60, $65 million of value. And they take the taxes up front. And the taxes are taken out in real terms right now, but your payout is in nominal terms, right? MISADA, depreciated, okay? Or you could take an upfront lump sum payment. If they do that, they take the taxes upfront out. Okay, so you win $100 million. Okay, we'll pay you 58 million because now you're instantly in the highest tax bracket possible. Okay, so they pay you that 58 million off the 100 million they took in, and then they gathered 15 million, and then they put it in short, the medium term cash bearing asset, short to medium term income assets. They might put a little bit in private equity, a little bit in stocks, etc. But if it makes you feel better, they have to pay their pound of flesh too, because most of them, instead of investing in themselves, they give it to Wall Street, and Wall Street overcharges them. And speaking of Wall Street overcharging, I posted a couple of graphics into the Veritaseum chat. I didn't get to speak on them because I was in a rush, taking care of my good news, so that's good. Can't wait to announce that. The Bitcoin inflows last week, $75 or $70 million of Bitcoin inflows. That's investor Wall Street money going into Wall Street Bitcoin. That would be, trusts, ETFs, futures, etc. Okay, $1.5 billion. I'm sorry, Bitcoin in general. I'm sorry, not Wall Street. Bitcoin in general. $70 million last week. $1.5 billion the following week. Significant, with 24 times increase. Okay, why? Well, the reporters say, and they're probably right, the Bitcoin ETFs are being launched. So everybody's putting money into Bitcoin, aren't they? Yes, no?
Yes, absolutely. No, I think the ARCA, I think the ARCA ETF had a record $2 or $3 billion inflow on its first day. Is that not a record?
No, I don't think so, because they're not putting their money into Bitcoin. They're putting their money into a trust. That trust takes that money, right? Gives some of it to a trustee, some of it to the lawyers, some of it to the accountants, some of it to fund administrators. What's left over goes to traders, and those traders go and they buy futures. Okay, and the traders take their little bit, and the futures brokers, they take their little bit, and now you have futures. But those futures have to be rolled over because they're month by month. I'm assuming they don't buy front month. I have no idea. But futures have expiry dates. You have to roll the futures over. You buy the future at a premium. You roll it over at a discount. Roll it over means you sell the one you have and you buy a new one. But wait a minute. If you overpay relative to spot, and spot is actual Bitcoin, the real thing. So you overpay for a future, a Bitcoin future, and you're paying more for that Bitcoin future than you pay for Bitcoin. And then when it's ready to expire, you then sell it. So you can buy another future. But when you sell it at a discount. So you're selling it for less than you would have gotten if you sold Bitcoin. So you're buying this stuff for more than Bitcoin. You're selling it for less than Bitcoin to buy another one for more than Bitcoin. You're doing that over and over and over again, as you're paying at least 3 layers of fees, at least. Okay? So why in the hell would you do that when you could just buy Bitcoin? So
By the underlying asset. Yeah.
Right. And it's yours. So you don't have to worry about, IRS freezing your assets, a judicial order freezing your assets. You don't have to worry about lawsuits, et cetera, et cetera. You have to worry about obeying the law, but you have control of your assets. Okay? So you're the disposition, you're the custodian. And on top of it, those expenses, those rolling expenses, they add up. If you take a look at that chart, I think it's roughly a 4 or 5 year chart, 2 or 3 year chart. Look at the difference in the performance between Bitcoin, the GBTC, the Grayscale Bitcoin Trust, and the futures, the Bitcoin futures. Dramatic difference, right? The Grayscale Bitcoin Trust underperformed Bitcoin by, I don't have it memorized, but around 50%, which means you're getting half the return, and you don't even own a Bitcoin. The futures.
Yeah, I always wondered why they sold at such a big discount. I mean, today I think the discount's what, 35%, something like that.
Yeah, well, over the last couple of days, it's been a premium to Bitcoin, most likely because the way the futures market and linkages go. I'm pretty sure the Bitcoin Trust may use some derivatives. I have no idea. I don't know. They may just buy spot. I really don't know. But there's been a premium over the last couple of days. That's good. So they can use that for marketing. Bravo, bravo, right? But people know what they're talking about. Think about my investment horizons. There's no such thing as an investment horizon over a couple of days or a month or a year. So you go through a couple of years and you say, you're not really buying Bitcoin. You're buying half of what Bitcoin threw out without the actual Bitcoin. I'm not beating up on that trust because we look at the futures, the story's no better. The story's actually worse.
Right.
The story's actually worse. So another aspect of accumulating wealth, when you want to buy something, you buy it. You don't buy a simulacrum of it. You don't buy a pale imitation. You don't buy somebody's leftovers or 30 seconds. You buy it. You want exposure to Bitcoin? Buy Bitcoin. You could go to the most expensive exchange, which is really a broker dealer, but that's a different, story in the country, which is Coinbase. You could buy Bitcoin. Or I could go to Alien and say, here's $5,000. Can you sell me 20th of a Bitcoin? Is that 20th? What the math? Whatever the math is. $3,000. Can you send me a 20th of a Bitcoin? That's how I bought my first Bitcoin at the New York Bitcoin Center on Broad Street, across the street from the New York Stock Exchange. Nick Spanos, who's an old school OG Bitcoin head, and Tone Vase. And I did a deal, got my first bit of Bitcoin. I think it was 2013. I didn't come here a long time ago in the crypto space, but I came with a very, very financial engineer trained mind in terms of valuation, financial engineering, et cetera. So I looked at things totally, totally different, which is why if you look at our patent applications compared to the banks and the developers and the engineers and the economists, our patent applications look and read very, very different. Luckily.
Yeah. You mentioned